Hi, Steve Sosnick here with today's Interactive Brokers Midday Market Update for Monday, August 31st, 2020. It's such a beautiful day here in Connecticut that I decided to do today's taping outside rather than in front of my usual backdrop. It's just too gorgeous to be sitting inside if I have an ability not to be. And so here's my few minutes outdoors and during the trading day. And just one example is I've got this flower outside and there's a hummingbird feeding at it. This is why I'd rather be outside than in front of my screens as I am most of the day, almost every weekday, pretty much every weekday. And so we're looking at yet another okay market. It's the end of the month. This has been a historic August. And this has been something that we can really look back upon and say this has been phenomenally unusual. We were led higher, largely, at least through the end of the month, by Apple and Tesla, which, as you know, or as you should know already, split today. Apple 4 for 1, Tesla 5 for 1. Both of those are continuing their advance. For those of us, including myself, who thought this might be a buy the rumor, sell the news type of deal, at least as of today, at least as of this morning, it has been a buy the rumor, buy the news type of deal because I see, Tesla up about 8% and Apple up about 4%. Again, remind yourself, nothing fundamentally has changed. In Tesla, it doesn't really matter because fundamentals in that stock have no bearing on the pricing and sentiment behind it. In Apple's case, I do want to kind of mention that over the last 12 months or so, the stock's up about 150% with earnings, 4-quarter trailing earnings up about 12. So in that sense, the stock probably somewhat should matter when it comes to earnings, but as of now, momentum remains your friend. Here's an interesting little tidbit, and I have to, pardon me for looking down at my phone, but I want to make sure I get this right. And this is according to the Canadian economist, David Rosenberg. Basically, he did some research in how the S&P 500 lined up with some of the best Augusts of all time. And in terms of Augusts that have been this strong, they were 1928, 1929, 1932, 1933, and 2000. For those of you who are students of market history, those are some fairly auspicious dates. 1928, the market was sort of beginning a huge advance, which culminated in August of 1929, and basically the market then crashed a month and a half later. 1932 and 33 were pretty much the depths of the Great Depression. In 1932, we had, basically the market, the whole economy was pretty much going to seed, at least in the US and through much of the world. 1933 was pretty much after the New Deal was initiated, so you were coming off a very, very, very low base, which is certainly not the case here. In 2000, which is within the lifespan of at least many of us, we were in the midst of the tech bubble, actually kind of in the bursting of the tech bubble period, but it was sort of a down and an up and then a down. Some people may want to draw parallels to that, but we are certainly in unprecedented times. More or less at the same time, we had Chairman Powell of the Fed last week. We alluded to the tightrope that he had to walk, and he pretty much did it. That's been one of the hallmarks of this market, and whether or not, it's hard to say whether or not all these people are so skilled and all these companies are so skilled at managing expectations and beating expectations, or whether just all news is good news. And it's really hard to parse out. But this morning you had Fed Governor Clarida basically saying that we would do yield curve control, but it's too difficult, which I kind of doubt. I mean, I think financial technology is at a point where we can pretty much do that if the Fed wanted to, but they don't want to. And by the way, pretty much the whole economic paradigm of interest rates and of inflation and unemployment is, throw that out the window. It really doesn't make a lot of sense. And so, market kind of shrugged at that one. Big deal. This is the kind of world we're living in, and so you're You continue to see markets moving higher. As I'm looking, I see the VIX up again. I just had to double look at my other screen to double check that. VIX up about 2 points on essentially an unchanged day. There are two theories to that, both of which are plausible. And one is that there's definitely fear in the market. You've got people buying the market, FOMO, and holding their nose. Another one is you've got such demand for calls, and whether those are just speculative or whether those are the people who don't really want to own the stocks that are leading the market, but feel they have to participate in some way. So essentially not owning these overvalued stocks and holding their nose by buying calls. Either way, that's keeping vols very firm. Now, I would actually be more worried if implied vols relative to historical vols were imploding, because that would mean outright complacency. So this one's a bit different. You've got this divergence, which is telling you that somehow I tend to believe that it's more people not believing in the rally than overly believing in it, because we would see an inverted skew. If it was all call buying, we would see the vols on out of the money calls be more or less in line with the vols on out of the money puts, which is really not the case. It's not all that steep to the downside either. So I think just people are expecting something to break, which is a bit weird. And I think that really bears watching, and we'll see. But as of now, well, what's been working for you is keeping working, at least as far as this month goes. And we will proceed on from there. We'll talk to you next month. Take care, everybody. Bye-bye.